Hey guys, how's it going? It's your boy Cassie from Passive Passion Online. Coming in today's video, I'm going to be talking about something really interesting, and the topic is going to be what most investors look for before allocating capital. So it's going to be an interesting video. I want you guys to stay with me till the end, all right, so that you won't be missing on some really valuable information that I'm going to be sharing in today's video. All right, I'm going to be with you guys right after this short little intro. So, welcome back. Now, let me ask you a question. Imagine someone walks up to you tomorrow and says, I have an opportunity. Now, the presentation looks professional, the website looks impressive, the numbers look attractive, the industry sounds promising, but would you immediately write a check? Most serious investors wouldn't. Not because they are negative, not because they are afraid, but because experienced investors understand something extremely important, which is allocating capital is not about excitement. It's about evaluation. And one of the biggest differences between successful investors and unsuccessful investors is the quality of questions they ask before making any decisions. Today, we're going to be discussing about the kind of questions what most investors ask before they come up with their respective decisions. Anything that's got to do with the process and steps before allocating their capital, and why understanding this process can dramatically improve their decision making. Now, I'm going to talk about the biggest misconception about investors. One of the biggest misconceptions people have is that investors make decisions based primarily on returns. In reality, most investors evaluate several factors before they even think about potential outcomes. They often focus on trust, management, communication, industry fundamentals, operational structure, and transparency. Because experienced investors understand that a great opportunity managed poorly can become a poor investment. I'm going to talk about the subject on why capital is different from money. Most people think capital and money are the same thing. They are not. Money is simply currency, whereas capital represents opportunity. Capital represents years of work, years of sacrifice, years of discipline, years of accumulated effort. That is why serious investors protect capital carefully. They don't rush, they don't chase headlines, they evaluate. Now, I'm going to discuss some of the most commonly asked questions by many of the sophisticated investors. The first question, who am I dealing with? Before many investors even think about evaluating an opportunity, they evaluate the people. This is often the first filter. Questions include, who are these individuals? What experience do they have? How do they communicate? How professional are they? How long have they been operating? Because people matter. In many cases, investors are simply not allocating capital into a business. They are actually entering a relationship, and relationship requires trust. Second question, do I understand this business? One common trait among sophisticated investors is that they seek understanding. They want clarity. They want simplicity. They want to understand how revenue is generated, how operations function, what drives demand, and how value is created. The more complex something appears, the more questions they ask, because understanding reduces uncertainty. Third question, is there real demand? One of the most important questions any investor asks is, does the market actually need this? Because businesses ultimately depend on demand. Without demand, revenue becomes difficult, growth becomes difficult, sustainability becomes difficult. That is why experienced investors spend significant time studying industries, not just opportunities. Industries. I'm going to talk about why industries matter. Many inexperienced investors, I'm referring to inexperienced investors, they actually focus on individual opportunities. Sophisticated investors often begin by studying industries. They ask, is this industry growing? Is this industry essential? Is this industry resilient? Is this industry solving a real problem? Because strong industries create stronger opportunities. I'm going to talk about the importance of communication. Communication is one of the most overlooked factors in investment relationships. Many investors value responsiveness, clarity, consistency, and transparency because communication often reflects professionalism. And professionalism builds confidence. When communication breaks down, trust often follows. I'm going to tell you why transparency matters. Transparency doesn't mean revealing everything. Transparency means being willing to answer reasonable questions. It means creating an environment where people can understand processes, expectations, and operations. Transparency reduces uncertainty, and reducing uncertainty often improves decision making. I'm going to tell you why sophisticated investors perform due diligence. Experienced investors rarely rely on first impressions. Instead, they verify, they investigate, they learn, they ask questions. They perform due diligence. This process helps them separate assumptions from facts, marketing from reality, excitement from understanding. Due diligence is not negativity, it is responsibility. I'm going to talk about the role of trust. Trust sits at the center of every major financial decision. Without trust, questions increase, confidence decreases, decisions become difficult. With trust, communication improves, relationships strengthen, decision making becomes easier. That is why trust remains one of the most valuable assets in business. And I'm going to tell you why referrals often matter. Many serious investors appreciate referrals. Why? Because referrals represent transferred trust. Someone has already interacted with the business. Someone is willing to make an introduction. That creates an additional layer of confidence. And confidence matters. I'm going to tell you what investors look for in management. Management quality is often one of the most important factors investors evaluate because industries change. Markets change, conditions change, strong management teams adapt, weak management teams struggle. That is why experienced investors often pay close attention to leadership. Now I'm going to tell you the difference between emotion and analysis. One of the biggest challenges when it comes to investing is emotional decision making. Fear, greed, excitement, urgency. These emotions often influence decisions. Sophisticated investors attempt to slow it down. They focus on analysis, they focus on understanding, they focus on process because process often leads to better outcomes. I'm going to tell you why long-term thinking matters. Many successful investors think in years, not days, not weeks, not months, in years. Long-term thinking changes everything because it encourages patience, discipline, evaluation, and perspective. And those qualities often improve decision making. I'm going to talk about the value of education. One thing that consistently improves investment decisions is education. The more people understand industries, operations, business models, and economic activity, the better equipped they become. Knowledge creates clarity, and clarity creates confidence. I'm going to talk about the bigger lesson. This conversation isn't really about investing. It's about decision making because every important decision in life benefits from research, understanding, verification, patience, and critical thinking. The people who often develop these habits make better decisions, not only financially, but professionally and personally as well. So if you're interested in learning more about logistics, shipping container investments, alternative asset discussion, or the industries we discuss on this channel, then visit our website and submit an inquiry form. One of our managers can learn more about your goals, answer your questions, and determine whether further conversation makes sense. We believe informed conversations create better decisions. At the end of the day, most investors are not searching for perfection. They are searching for confidence. Confidence in the people, confidence in the process, confidence in the industry, confidence in the information. That confidence is usually built through understanding. The better the understanding, the better the decisions. Better decisions often lead to better outcomes. So, hope you guys enjoyed this video and found it informative. So if you have any questions, any doubts, feel free to reach out to us so that, me or one of my managers from my team can be in conversation with you and can also ensure that your questions are being answered. And if you're really serious to get started with the alternative investments plans that I often discuss in my channel, then we can take things forward by helping you out. All right, guys. So hope you enjoyed this one. We'll be coming out with more videos in the upcoming days. Till then, you guys take care. God bless. Cheers.